So I appreciate everyone getting on this morning. We're the San Diego and Imperial Small Business Development Center. My name is Danny Fitzgerald, and happy to have everyone here on a Friday morning and be able to learn from our panelists. We are recording this meeting. We'll have it available on our YouTube page as well as our Facebook page. So appreciate everyone getting on this morning, and thank in particular our panelists for giving of their time to be able to educate the small business owners of what's kind of happening with the capital markets. We know that everything's been thrown into flux pretty heavily with COVID-19, and the Small Business Development Center, we've been here to help through, obviously pre-crisis, post-crisis, and certainly during the crisis, having helped thousands and thousands of businesses. And again, we're supported by the Governor's Office of Business and Economic Development, along with the U.S. Small Business Administration, and all of our services are at no cost to you, the small business owner. So we'll have today on the panel as well, Sudarshan Shanak, who is our director of our North San Diego Center, but also does a ton of assistance of small businesses and is well versed in that. And we have, of course, our panelists, and we're going to go around and let each of them introduce themselves as to what they do and a little bit about their institution and so forth. So why don't we start with you, DeWitt?
Hi everyone, I'm DeWitt. I'm a commercial banker with Pacific Premier Bank. I've been here going on 5 years. Pacific Premier Bank is a business bank, a real estate bank, a contractors bank. We bank large businesses, small businesses, and my focus is really business owners, real estate investors, contractors, and developers.
Fantastic. And Fred?
Good morning. I'm Fred Crispen. I'm with United Midwest Savings Bank. We're a small savings bank headquartered in Columbus, Ohio. We don't operate as a traditional bank. About the only thing we really do is make SBA loans on a nationwide basis. I manage the small loan division for the bank nationwide out of Panama City Beach, Florida, with a staff of 28 and growing, doing small loans for startups and existing businesses, 20,000 up to 150,000 under the SBA 7A loan program.
Fantastic. And Renee?
Good morning. I'm Renee Hinton with Comerica Bank. I am Vice President, Business Banking Specialist, and a Relationship Manager. Comerica Bank has been around for over 170 years, and we lend in 5 states, which are California, Michigan, Texas, Arizona, Florida. I think I covered them. I particularly lend to businesses that are 3 million and under in revenue. We do look for that they have been in business for 3 years. And my minimum loan amount is 10,000, and I go up to 500,000, sometimes to 750. And we offer SBA conventional, owner-occupied, and investment real estate financing.
Fantastic. What about you, Denise? Well, it looks like Denise is frozen. We'll come back to Denise. Why don't we go to Janelle?
Hello, I'm Janelle Shalou. I'm a business relationship manager at Chase Bank. Chase is nationwide, is one of the largest banks in the country, but we do pride ourselves on really getting to know our business clients and their needs. We work with businesses. My sweet spot is 1 to 5 million, but we do have partners that can go up to, huge loan amounts depending on, the business. So we do partner throughout with different partners. We pride ourselves on working on small businesses. The ones that we won't work with would be anything that has, there's a federal law against, say, cannabis, things like that. To be in business, because of COVID, Chase has changed their we had some restrictions placed. We are looking for 2 years in business now. We're shying away from startups. So that's one thing that has changed with us. And for me, my sweet spot is 1 to 5 million in revenues.
Fantastic. And we'll wait till Denise is able to reconnect. Looks like she had some technical difficulties. So we'll move to Sudarshan. He can introduce himself as well as a little bit of what the SBDC services are in general.
Well, thank you, Danny. My name is Sudarshan Shanak. I'm the director of the North San Diego Small Business Development Center. I've been a serial entrepreneur myself with many failures and some very good successes. My background is in management accounting, financial management, business turnarounds, and strategic planning. So we have a team of business advisors who all pretty much have either owned their businesses or still own businesses and have the academic background. And their mission is very simple: to try and help you get your business to the next level. And in getting to the next level, almost always, everybody is going to need one particular resource, and that's money. So we help you identify opportunities where you can get some funding and work with you to make you bankable.
Fantastic. So along some of these lines, as we come back to our lenders, so you each touched on a little bit of some of the businesses you do work with, and some of the startups, but kind of along those same lines as we lead into that, in addition, what are the types of loans that you offer? And then also some of the other question in terms of, do you work with, startups and how long they have to be in business and so forth. Why don't we, because we know Fred is Mr. Startup, so we'll start with him.
Yeah, we probably 90% of the loans we close every month are pure startups, meaning the day that we fund that loan is the day they open their doors for business. So we're not afraid to do startups. It's a credit scored loan program. We use the Fair Isaac small business scoring model, better known as liquid credit. It's the same model that SBA now uses and behind us on all these loans, but I've been using that model since 2003. So we're infinitely familiar with how it works and what it's looking at. These are all 10-year, fully amortizing working capital loans up to 50,000 are at prime plus 3 1/4. Everything over 50,000 up to 150 is prime plus 2 3/4.
Fantastic. And then same thing to you, Renee. You touched a little bit on some of the wheelhouse that you have there at Comerica, but also kind of the types of loans and such that you do.
We don't do startups, so we are looking that a business has been in business for at least 3 years and has some profit with them. We offer everything from business lines of credit, and if they don't have any type of collateral, we're going to go SBA, which is really great because in 48 hours we have a decision and we're closing them in less than 4 weeks, averagely about 3 weeks. The only thing we've been waiting on lately has been transcripts from the IRS. We do equipment financing, owner occupied real estate, which is going to be purchasing your building or refinancing your building. We're going to do investment real estate. We have a special cash out second on investment real estate. So we're going to do the full gamut, even credit card and merchant card services for the businesses. And currently we have a promotion, which is till the end of the month, which is 3.5% on a line of credit for 6 months, interest only for 6 months on term loans. And we're waiving up to $500 in the SBA fees. So $250 off the SBA fee, and if we don't charge a loan fee of $250. So we do have some good promotions. We are doing lending right now, even with COVID, but we are looking at businesses that have remained open and not really had too much of a decline, maybe about a 20% of decline in revenue due to COVID. But we are looking at that they've been an essential business or have been open through this time.
Awesome. And DeWitt, same back to you. So kind of, what types of businesses you work with? Do you work with startups and what types of loans funding are you doing right now?
Yeah, so I'll work with early stage businesses, later stage businesses. We don't really do any startups. So I think a business that has ideally at a bare minimum, 2 years of tax returns, 2 years of financials. Size-wise, that could be anything from a business that's made its first $250,000 or done its first $250,000 in sales all the way up to $100 million. As far as loan products, I offer basically everything under the sun. So all forms of commercial finance for businesses, for real estate investors. We don't do like the 7A, the smaller 7A loans. We tend to do like 7A stuff that's usually like $250,000, $500,000 or more. And really the most, I think, important thing for a business owner when they're looking at all of these different loan options and trying to figure out, first off, do they qualify for a loan? Aside from startup lending, because that's a little bit different, but with what I do, it all comes down to profitability. So the ratio that I rely most on is the debt service ratio or debt coverage ratio, which in most cases at a minimum needs to be a 1.25. And this ratio, this is the most widely used ratio for lending at virtually every bank in the country. So the ratio, you need to have higher, ideally, than a 1.25. Which basically means the formula for it for everyone to kind of demystify how we make decisions. It's EBITDA as your numerator divided by annual debt payments as your denominator. So EBITDA simply being earnings before interest earnings before interest, depreciation, and amortization, and just divide that by annual debt payments, and that gives you a ratio. You want to be above a 1.25. If you're below a 1.25, then it might be a little bit more challenging for me. If you're above a 1.25, then you probably have some options, which basically means that your business may have enough cash flow to support whatever debt you're looking for.
Fantastic. Thanks, DeWitt. We got Denise back. I have great sympathy for the joys of our internet problems and stuff like that. So we'll let her catch up a little bit. Introduce yourself, Denise. What you do there, and your institution, and a little bit on the types of businesses you work with.
Okay, I apologize for that. I switched to my cell phone, which has much better technology than my laptop, so hopefully we'll be fine. I work for Home Street Bank. We are a community bank in San Diego. We're actually headquartered in Seattle, and we bank the Pacific Rim. So that would be Washington, Oregon, California, and Hawaii. We actually lend in a larger footprint than that. We have about 9 states that we lend in, both residentially and commercially. We're a full commercial bank, just like your big, large institutions. And we can do everything they can do. We just do it with a little bit different of a twist. Relationships, I would say, is our biggest driver. I can work with a business that is literally just coming to fruition and coming into conception, up to the big guys that have been around for years and years and are the huge corporate accounts that need all those bells and whistles. So it's nice to be able to cater to both sides of that community. I myself am in East County. I work with a lot of manufacturers, distributors, things of that nature. But we will look at really any industry type to have a business relationship with, definitely. Our commercial lending goes up to, I'm here in our offices, up to, I think he does 15 or 25 million, I believe. I myself have a product that I work with here in the branch that goes as low as 10,000 up to 350,000. So anything above that 350,000 mark is when we bring in that commercial lending team. I work very, very close with them to ensure that everything goes smoothly. And if it is something that we cannot do, I work very closely with partners like yourselves, SBDC and CDC, Accion. It's very important for us to have those relationships because we never want to tell our clients no. We always want to at least give them alternatives, options, another route that may not necessarily have been in their pathway initially. So that's what we do, and that's what I specialize in myself. The products that we do have: line of credits, termed loans, equipment lending, AR lending as well. And I think that's about it.
Fantastic. Thanks, Denise. Now we'll come back to you, Janelle. But it's the shorter version of the question, so we can get you caught up too. In terms of a little bit on the types of businesses you work with. Do you work with startups, and the types of loans you really are working with?
Yes, we don't work with startups. Usually, we require 2 years of tax returns. This is a change since COVID. We've tightened up our lending a little bit due to some of the challenges that businesses have faced. We work with all types of businesses. The minimum loan amount is $10,000. We can go up to 100 million. Um, you know, we do credit scoring, and we do look at a cash flow, as do most banks and lenders. So we do all different types of lending. We can do equipment, real estate, commercial lines of credit. So we're a full service bank. We're able to offer our clients pretty much any product or service that they need. We do pride ourselves on working with business owners, getting the best you know, loan out there, and we do work with them and getting them to the point that they are lendable. So you know, a lot of times the client will come in and we'll do like a pre-screening and go through, you know, their tax returns, their financials, see what they have, and then you know, give them pointers on how to best present it. So we do, again, 10,000 to 100 million on our lending.
Fantastic. And then we're going to come to Sudarshan here, because we've had a lot of different terms and ways in which the lending products work. So if you could talk a little bit more about how the services at SBDC work, and kind of also help people understand everything from credit score to debt coverage ratios, as well as cash flow.
Well, thank you, Danny. Once again, folks, yes, you know, the most important thing that any lender, whether it's a traditional bank or an alternative lender, is going to look at is for you, the borrower, to be able to convince the lender that you have the capacity to be able to repay and service the debt. Essentially, can you pay back the loan and the interest on it on a timely basis? So to be able to do that, you have to be able to prove that. And so to prove that, you need several things. If you have already been in business, make sure you file your tax returns on a timely manner. And for any current period, make sure you have good accounting systems and controls in place and are able to quickly show how your business is doing in the current year. The second part is cash flow. Cash is definitely king. Make sure that you focus, first of all, on making profitable revenue and control your costs really tightly. But, you know, being able to make a sale and bringing the green back home is a very different thing. So you've got to be able to manage your accounts receivable, make sure your money is coming back home and your accounts receivables are not stretched out. And on the reverse side, the same thing with accounts payable. Make sure that you know, you're current with your obligations, because that all goes on to show how fiscally prudent you are. And the third thing which goes into the whole equation is, if you have product that you sell and you have a lot of inventory, make sure you don't have dead, slow-moving inventory in there. So inventory turns are very important. So your accounts receivable, your accounts payable, your inventory, you know, the traditional working capital components, make sure that you're managing them very tightly. And then at the end, be able to make sure that all of those are generating enough cash for you. Like DeWitt said, make sure that there's enough money there so that when you look at your earnings before interest, depreciation, and amortization, there's at least 1.25% to the amount of debt that you have to service. So we at the SBDC, really, Danny, can help prepare people so that they when they go and visit with the banker, they have all the information that a banker would need. And we have the benefit of partnering with all the financial institutions that are here, you know, presenting today. We pretty much understand which each one of them is, you know, for what's a sweet spot for any one of them. And then we can refer you to those particular banks. But we first make sure that you have all the information that the banker needs to be able to start looking at and reviewing your loan package.
Fantastic, Sudarshan. So you can really see here that, you know, in concert with the lenders, the Small Business Development Center can be, you know, your partner and kind of your advocate, or the way in which you're able to work with the lenders. And that's really what we're here to do, to be able to make, you know, your relationship with them work much more smoothly. So kind of want to shift, because, you know, we're here in month 7, and COVID-19 has certainly impacted us real heavily. But I want to kind of, you know, in terms of how it's impacted your business, but not only that, also kind of some of the things that the conversations or things that you're talking to clients about as we look kind of in, you know, going forward with the future. And why don't we start with you, Fred?
Yeah, we've, from the standpoint of liquidity for startup businesses, we've increased what we like to see post-close after the borrowers put their required 10% in per SBA guidelines. We want to see that they've got at least 50,000 sitting in an IRA, 401k, checking, savings, something to fall back on if they don't hit those projections in stride like they think they will do. Outside of that, we're not looking at any food service related businesses or fitness related businesses at this time. Outside of that, we're doing pretty much everything we've always done. We don't do construction build outs. The borrower has to have all those tenant improvements and everything done or be operating from their home so that they've got all the licensing and everything else in place the day we fund that loan.
Fantastic. And Denise, what about you? I mean, how has COVID-19 impacted Home Street and your clients?
A couple notable changes that we've had. Of course, we're a bank, so we require full documentation 2 years to 3 years, depending on the dollar amount, tax returns, business financial statements. So that, of course, is going to be the same. But we're also asking for a COVID plan. What have you guys put in place in order to and it could be physical changes, right? We've implemented, plastic barriers, depending on the business. In addition to the physical changes, it's also, the financial changes as well. What have you put in place to help minimize the impact of loss of revenue if that's happening to your business? And a lot of times we'll be looking for additional collateral. Maybe we're asking for, that second property to help secure that loan when before COVID, we wouldn't have necessarily needed to do that because the initial property would have been sufficient. But due to the uncertain environment, different changes as far as tightening our belt and making our just making sure we're covered as well, and making sure that if something were to occur that, hey, we have these parameters in place. So those are the most notable changes. As far as that, our programs have pretty much stayed the same. There actually isn't any industry that we didn't work with before that we're not working with now. So some of them we just don't work with at all. But like food and fitness, it's not that we would say no to any deal. We would be extremely very, very stringent in what the terms would be, I would say. But if it makes sense, if the company historically was strong and it may be in the food industry, it wouldn't be something, we would definitely look at it. We wouldn't just automatically say no.
Fantastic. And Janelle, so same thing to you. I know Chase did a ton of work around PPP and helping folks, and I'm sure now that we're in the throes of forgiveness, now that all of that has opened up, and of course the rules changed again today. We appreciate all the hard work you've done, but kind of looking more in terms of the present and the go forward for lending and funding. How's COVID-19 impacting that marketplace for Chase?
Yes, I apologize. I don't know why my video is not working, but I do look better than a triangle and a circle, hopefully. But COVID-19 has impacted Chase. We do require more stringent requirements. We ask for 2 years. We don't do startups any longer. We do have a questionnaire that we ask all of our clients to fill out, and we go through the process. We want to find out, where they were at pre-COVID, what steps they took, during this pandemic. Have they been able to pivot? If they are closed, if it's a restaurant, are they, still open? Are they able to do outdoor dining? You know, I have gym owners that are doing classes outside. You know, they've changed their direction. So we're looking to see, you know, what steps they've taken to make sure that they're able to sustain their business during this time. We're also looking at, you know, projections, seeing, you know, what they feel that the business will do going forward, and again, looking for sustainability. So I do have some restaurant owners that are doing amazing during this time. They've been able to really take advantage of outdoor dining, delivery service. I have one that was a cash only business. He changed to accepting only debit and credit cards. And because of that, he was able to expand his business. So those are the things that we're looking at. We're looking at, again, the relationship, if they've been able to grow, you know, all the information that they provide us, and it's the entire package. So we are lending. Again, we are looking at everything that they have in place. If they do have secondary source of income, the relationship, things like that. So there's still money out there as long as you know how to present yourself to get it.
Awesome. Thanks, Janelle. And what about you, DeWitt? How are you kind of looking at the present and the future post-COVID?
So I'm very optimistic and very bullish right now, and our bank is aggressively looking for new qualified opportunities to lend on. The past 2 months have probably been the busiest that I've been this year at the bank, and I was super busy in April and May doing PPP loans and modifications, and the past 2 months has been nothing but new requests. The new requests that I've seen over the past several months, aside from real estate, so I'll just focus on the business lending side, has been to distribution companies, consumer discretionary companies. Those are companies that make some sort of product for consumers, manufacturing companies, professional service companies, construction companies. So I think at this point, I feel like I have a relatively good understanding on how COVID has impacted businesses, which businesses were impacted by COVID, which businesses were initially shut down due to COVID. And at this point, I feel like a lot of those risks we've wrapped our heads around. You know, are we going to loan millions of dollars to a hotel right now that's not in a prime market? Because some of the hotels in San Diego, for instance, that are on the beach or near the coast, they're doing actually really well right now. Other hotels that are in non-prime markets, these are hotels that, you know, might be 10, 20, 30 miles east and maybe service more like business travelers for events, for conventions. They're struggling. So probably wouldn't do those hotels that are in off market. Same with restaurants, like and I have a lot of restaurant clients. Some are doing pretty well right now. You know, the ones that initially had the ability to pivot and offer outdoor dining, ramp up deliveries, they're doing okay right now. They might not be doing gangbusters and making a huge profit compared to last year, but they might not be struggling the way other restaurants are that don't have that outdoor space or don't have that capacity to switch from indoor dining to outdoor dining. So at this point, I feel like I have a fairly good understanding of what the COVID risks are, how it's impacted businesses. But when business owners are communicating to the bank, like, you know, how did COVID impact your business? I think the most important thing is to really just give the bank a solid understanding of, you know, here's where I was in March, April, then COVID hit. This is the negative impact that COVID has had on my business. My sales were down, you know, 10, 20, 30, 40%, 50% for 2 months. But all of that demand was pent up demand. All of those customers that didn't come to my business or didn't come to my store in April, May, June, they all came back in July and August, and they're all spending money now. So, you know, all of that pent up demand is coming back. So here until the end of the year, I might really expect to have a really good Q4. So I think just painting a picture for the bank that's really clear on how COVID impacted your business, whether negative or positive, because a lot of businesses are going to see record profits this year. So sharing the impact, negative or positive, kind of what's going on right now. You know, in other words, are you back to pre-COVID levels of revenue? Have your revenues gone back, you know, entirely or come back entirely? So just painting that crystal clear picture for the bank.
That's fantastic. So I appreciate an optimistic view. That's good to hear some optimism going on right now. And Renee, how about you? For Comerica, I know also you've done a lot of work, you know, up to this point, but really kind of now the present and the future in terms of COVID.
I was just going to say, yes, we did PPP and we're getting ready to start going into forgiveness, right? Today we have a bunch of training on it. I actually have been probably after PPP the busiest that I have ever been. You've got a lot of businesses out there that have picked up so much volume that they hadn't in the past. You've got a lot of home-based business, internet businesses that have just exploded. Same with target industry, business to business have been busy, or they've rerouted what they were making and maybe making something a little different to help in this current times. So we are still lending. We have not gotten rid of any of our product lines. We're still a full service bank. The only thing that we might be looking differently is I have a COVID questionnaire, and basically it's talking to the customer saying, how has COVID affected your business? How have you made any modifications? Like I think restaurants have come up a couple times. You know, if they've truly been closed and they're having a hard time, it's going to be a hard time getting financing. But I have a couple that were predominantly, you know, to go and pick up orders, and they've been the busiest they've ever been. So of course we're going to lend to them because financially it makes a good decision to do that. So we're not going to eliminate anybody, but a real true question is if their sales have dropped by 30%, chances are they could be declined due to declining sales in this market. But a lot of them, and I think a couple of us have mentioned it, if they maybe have been closed for a month, but all of a sudden they've ramped up and they're having their best year ever, they've made up that the sales they may have dropped for those month and a half they might have been closed or only partially open. So we're looking at the full picture. We are asking if they got PPP. That really doesn't affect them because I would say probably most of the customers I work with are going to have forgiveness. I do see EDIL popping up a lot. So we do look at a customer, if they got PPP and they told the government that their business is negatively impacted and they get a large PPP loan. And what I'm talking about is anything over 25,000, SBA put a lien on your business. So that means we're looking at being in second position. So we're going to be a little more conservative. That doesn't mean we're going to do it. But for example, I have a customer that got 150,000 EDIL and he wanted 100,000 from me. We're going to look at their revenue size and make some decisions and through the conversation that we have with the client, see if it makes sense to have a large line of credit because they are sitting on a lot of cash right now. So the EDIL is coming into play, especially on the SBA version, not on the conventional sides. If we have real estate as collateral, it doesn't really come into play. We are looking for, if it's a non-bank customer, we're asking for bank statements because we want to see if they've been overdrafting their accounts. We want to see if they've been pretty consistent in their revenue. So we are looking, we're a historical lender, so we always looked at the past, but we are looking at how they've been handling their business through COVID.
Fantastic. That's some great information. And yeah, the impact of the economic injury disaster loan and in particular the liens, that is a very important factor. You know, so as we pass it on to Sudarshan, kind of, you know, along those lines, the conversations you're having and you know, our team of advisors is having with businesses, what are some of the hard things and key pointers that we're giving folks right now in terms of moving forward with COVID and their capital needs?
Well, you know, several people already have talked about the PPP and the EIDL, you know, loan program. Of course, they're both loan programs, and we are here to help you who might have received PPPs look at how you can maximize your forgiveness. So certainly reach out to the SBDC and we can guide you through that process. But the real challenge really is COVID-19. What would you do now that you have been impacted by it? So we've created a lot of programs within the SBDC network. We have on-demand adapt series of workshops. Please take a look at our websites. There's a lot of extremely useful and beneficial trainings that you can take at your convenience. Whenever you have the time, do that. But more than that, I want to point you to a new program that we launched after COVID, and that's Lean Essentials, that would help you revisit your strategy and say, now that I've been impacted by this COVID-19, how do I go about pivoting and making sure that I can recover from this? All the financial institutions who address this particular point are essentially looking at how COVID has impacted you and what are you doing to overcome the challenges that COVID-19 has created. So encourage you to come and participate. This is for businesses that are already existing. This particular program is not for startups. The Lean Essentials is for existing businesses to help you re-strategize, rethink, and say, how do I move forward from the position that I was in and was impacted because of COVID-19. So take advantage of the service that we offer, rethink everything, which would include things like, how do I stay in touch with my customers? What kind of software, what kind of efficiencies can I put in so that my customers know that I'm still around and I can still serve them. Just because we've been closed in some cases doesn't mean we've gone forever. So it's appropriate, if you haven't already done so, to start reaching out to your customers, letting them know how you have pivoted, how you can continue to serve them, and just make sure that you have a strategy in place to rethink your whole program at this point in time. The old saying, necessity is the mother of all invention. So we certainly have had a necessity here to rethink and reconfigure the way we're going to move our businesses forward. So COVID-19 related training for existing businesses on Lean Essentials is the one thing I would encourage all of you who are in business to look at. As far as startups are concerned, it's a challenge. You have to be able to show how you're going to be able to survive over the next 18, 24 months. And to be able to do that, because it's all projections, and you have to be realistic with your projections, you will have to be able to convince the lender that in case your business plan doesn't gel out the way you think it's going to, that you have enough other resources that a banker or a lender can tap into. And that includes things like collateral. Oftentimes we meet clients who are very shy and resistant to letting a lien be filed. So if you were a lender, I think you would want to make sure that you are able to recoup the money that you have loaned, as well as any interest on it. So be prepared as a borrower to give the lender all the assurances, including the opportunity to be able to file liens if that is necessary.
Fantastic. So lots of great information. I'm really enjoying our panel today, and I think there's some really, really good things coming out, especially as we move into our post-COVID world. So kind of now getting into a little bit on the nuts and bolts of kind of the processes. I want to just kind of a straightforward question. And basically, what is your application and underwriting process, and what are some of the timelines with that? Why don't we go ahead and start with you, Denise?
Definitely depends on the dollar amount. Anything 100K and below, we're going to be looking for 1 year's tax returns, business financial statements, and this is personal and business tax returns that we'll be looking for any beneficial owner for the company that is more than 20%, 21% possibly, and between the 100 and 200K mark, we'll push that up to 2 years. Anything above 200K will be 3 years, both personal and business tax returns and business financial statements as well. In addition to that, they will want that specific time frame to look at right before COVID and then after COVID. They will want those as well, in addition to the normal quarterly or annual statements that the business would provide.
Awesome. Same question to you, Janelle. What your application and underwriting process along with timelines?
Again, it depends on the dollar amount, 10,000 to 100,000. We look at 1 year business and personal tax returns. We look at interim financials, year-to-date financials. On an unsecured loan, on the outside, it'd be 2 weeks. It would depend on how complete the package is when it is presented. So, obviously, if you're able to, provide a full package, the time is shorter. We're able to get everything together, get it submitted. If everything's complete, we can get an approval, within a week. Again, it can take longer depending on any questions that we might have. Anything up to 500,000, we're going to ask for 2 years business, 2 year personal tax returns, year-to-date financials, profit and loss. We'll be looking at year-end 2019 to see how you ended last year. We would be asking also for financials from March to current to see, again, pre-COVID versus being in, the COVID world right now, to see how the business is doing. And we would ask a questionnaire. We would be asking you, what you have done, where you were at, what you've done, any changes you've made, things that you've done to keep your business going, if you've been able to keep staff on, if you had to let staff go, again, any lending that you've taken through SBA, PPP loans, EIDL, things like that. And then anything above 500,000, we'd be asking for 3 years. We do what's called a pre-flight. So we go over all the information beforehand, and we come back to you and ask questions if we see that there's something that we think the underwriter might not like or have questions. So we spend a lot of time before we actually do the submission to make sure that we're able to paint a good picture, tell your story about, what you need the money for. And again, we need that information from you, what you need, how much you need it, again, if you have any collateral. So the more information that you're able to give us, the better picture we can paint to our underwriters.
Fantastic. And Fred, I know yours is, pretty straightforward. So why don't you kind of talk about your process?
Yeah, it's fairly simple. Initially, all we need is the simple loan application that someone can go to our website, then go to SBDC.loan will take them right to the landing page on my bank website where they can download the application. It's a PDF fillable form. Take maybe 5 minutes at the most. It's basic information. That's all we need initially to credit score. If it scores above the cutoff we have set in the model, then we'll assign it to a packager who will then email that borrower and copy the SBDC counselor a checklist of everything we're going to need to move it down that assembly line, so to speak, into underwriting, and from there on into closing, dotting the I's and crossing the T's to be in compliance with SBA.
Fantastic. What about you, DeWitt? What's your process and timelines?
So process is pretty straightforward. I think it's really transparent. It usually starts with a conversation with the borrower to learn a little bit more about what they're trying to accomplish, what their goals are, how much debt or credit they need to realize what they're doing. And then at that point, we'll probably have an initial conversation about rate, term, structure, fees. If all of that preliminarily sounds agreeable to the borrower, then I would request financials, analyze everything, finalize whatever the structure, the rate, the term, the fees would be. And at that point, I would seek approval from the bank to put these terms in writing for the client. Once I put it in writing, it's called a letter of interest or LOI, which simply spells out, here's the rate, here's the terms, here's the amount of debt we're giving you. If you want to move forward, sign on the dotted line, and then we'll provide you a final needs list for underwriting. For smaller credits, so really for anything that's like up to $1 million, it can be done in 30 days or less. provided that there's no third-party appraisals or valuations needed. So if it's like you're buying a business, that would take probably 30 to 60 days. If it's you're getting $1 million of equipment, that could probably be like 45 days. But on simple stuff, lines of credit, simple term loans up to $1 million, it should be like about a 30-day process. For business loans that are larger than that, so say for $1 million to $10 million, it'll be a little bit closer to like 45 days, as long as there's no business valuation needed, no collateral audit needed. And for stuff that's say like 15 million or more, it would probably be more like 45 to 60 days.
Thank you. And what about you, Renee? How is it at Comerica, the process and timelines?
I would say, just like everyone else, it's pretty simple. Most of the time I would meet with the clients, talk to them, we'd review the strategic objective and go over a thing and complete an application. Now we're completing it via email and Skype or Zoom. It's an application, pretty simple process on completing that. If it's under 100,000, it's 1 year's financials along with a current profit and loss and balance sheet. And then we talk about how COVID has affected them and collect bank statements. If it's over 100,000, we're looking at 3 years. Once again, like I had mentioned, for us, we're going to run credit when I get that application, and we're going to look at the financials. So in 48 hours, I have a decision if you're approved, counteroffered, or declined. Then after we get that, we review everything we talked about, like you applied for 150, we got it, it went SBA, etc. Then we go from there and we do what's behind the scenes. So we're going to order transcripts. If we need an evaluation on property, we need to do title. But I've been closing my deals. So in other words, a client knows in 48 hours if you're approved or not. Then it's subject to title, appraisal, and SBA approval. Other than that, we're pretty much done within 48 hours. I'm taking about 3 weeks, some a little bit on the 4, but I will say I do get a needs list sometime from the SBA, like a business license, add to the insurance. If the customer doesn't get back to me in a timely manner, like they take a week to get me who their insurance agent is, that adds a week to the deal. But if you're on top of it and we've set up timeline and expectations, we're closing those deals in 3 weeks. But you know in 48 hours if you're approved and going to qualify. You don't have to wait a longer period of time wondering if you're going to be taken care of. So it is speed to market is one of our niches. So it's pretty fast turnaround, and we haven't changed our underwriting or anything for COVID. So we're still here to help our businesses.
Fantastic. Awesome. Great information, kind of understanding the process that everybody does. And we're going to move into our last question here. And again, I thank everybody for being on the panel. I also, you know, the Connecting with Capitals are thanks to our sponsors, which are Home Street Bank here, Main Street Launch, CDC Small Business Finance, Marble Bridge Funding, and Primary Funding. So I'm actually going to start with Sudarshan on this question, kind of as a bridge question from some of the things that all of the lenders talked about with their process. And then we'll lead kind of a similar question for the lenders. What are 2 to 3 tips on what a small business should do when they're seeking capital? And that can include something not to do.
Well, you know, the process is really by far the most important thing. So my encouragement to all of you who are looking for funding is start with your SBDC advisor, start your process there. They know what all most of these banks need. While some may need very basic information initially, but down the road as the application progresses, they're going to need more information. So we will help you, guide you through the process and make sure that you have all the information, including all the documentation that is needed for you to be able to eventually be able to close that loan with your lender. So the most important thing, be honest, be realistic, reveal all pertinent information right in the beginning. If you had a bankruptcy or if you had a foreclosure or anything like that, if you've been late on your payments, what were the reasons for that? Explain that right in the beginning. There's nothing worse than a surprise that comes up because you did not reveal all the information to the banker. These folks are very busy. They have a lot of loans that they need to work on. And if they find out they've expended 2 weeks or 3 weeks reviewing an application and then suddenly one of these unknown things pops up, well, it's wasted their time. And of course, it doesn't look very good for you either. So my guidance As far as process is concerned, work with your SBDC advisor who will take you through the real process of what all is needed by each of these financial institutions. Make sure that you have that, review them. We can also do a pre-flight because many of our business advisors are ex-bankers. So they know exactly what the underwriting criteria might be. So they can help you prepare and improve your ability to be able to get the funding that you need.
Fantastic. Thanks, Sudarshan. And Janelle, what about you? What are a couple of tips for small businesses? And you can even include what not to do.
Well, I think, the main thing would be to have a clear understanding of what your needs are, how much you need. I guess the big thing not to do would be to come to me and ask me how much I think you should have, because I don't know. I don't know your business. And you need to, and it shows me that you're not really prepared or have a strong grip on what's going on with the business and what your needs are. So I would think if you come to a bank, you would need to have a very good idea of what you need the money for, how much you need it, clear indication, have your, pull your credit before you go to Credit Karma or any of the credit agencies to make sure that there's no hidden surprises. As Sudarshan said, be upfront with us. We have to tell a story to the underwriter. And a lot of times the difference between an approval and a decline is the story we tell. So if there's something in your past credit history that's going to show up, if I'm able to be in front of it and say, this happened, but the reason was, and give a good explanation, then the underwriters are a little bit more willing to work with you. Having a complete knowledge of your financials, knowing, where you're at, especially during COVID, we need to make sure that where you were before, where you are now, be upfront if there's been any declines and what you've done to overcome any declines in revenues. If you've made pivots, if you've, made changes in your business model, things that you've done to stay in business. So I think the biggest tips would be prepared, have all your financials ready, know your credit, and know what you need.
Fantastic. What about you, Fred?
Pretty much like everybody else. I mean, we take a lien on the business assets, but that's it. So in most cases, the small loans that we're doing are basically unsecured because there's really no business assets there to go after. So we're relying fairly heavily on your personal credit. So make sure you know what's on your credit report because it's going to affect how you score in that small business model. Understand and know exactly how much money you need to borrow. Don't send us an application with a blank left up there for the loan amount and say, I want to borrow as much as I can get. Well, you've got to know what you need and tell us what you need. And we'll work from there. We'll never cut a loan amount back. I'll either loan you what you request or the amount you requested, or I won't make you a loan, period. I'm not going to give you enough to get in trouble and not enough to get the job done, so to speak. So know what you need, know your credit, and have a plan in place. How you're going to operate, what kind of licensing you're going to have, know what kind of hoops you're going to have to jump through to get the doors open. That's very key.
Fantastic. And what about you, Renee?
For us, and it seems to be a theme, is be upfront with your lender, because if you think we're not going to see that bankruptcy or we're not going to see those other UCC liens or 3 loans on the mortgages, there's nothing more embarrassing than have to go to your underwriter and say, I asked him that question 3 times and they said no. Same with if you owe the IRS money or you have a payment plan or you haven't filed tax returns, we're going to find this stuff out relatively fast. And that's the easiest way to get declined. Where I think somebody mentioned, if we know that you had a bankruptcy and it's been 5 years and we put it in the write-up and can explain it was happened because of A, B, and C, you're going to look more credible. But when we pull credit and it was a month ago and that it was finally discharged, you don't look very credible when, you know, on the application, we ask a number of times, do you owe back taxes? Have you filed bankruptcy? You know, please be upfront. I mean, I think that covers for all of us that's a key. The other key is work with your trusted advisors, your CPAs, SBDC, your attorneys. You should have your reliable partners. And the reason why I say that, and I always talk with a customer, maybe they've been in business for some time and their strategic objective was the CPA, write everything off so I don't pay taxes. Then they come and see me and maybe they made $1,000 in the last 2 years. I always tell them when I talk to them and we look at the financials, let your CPA know that your strategic objective has changed and you're looking to buy commercial real estate. I said, because if you don't keep your partners informed, they may not be able to advise you because you've changed your direction and they didn't know. So to stay in contact and have trusted advisors to be able to help you through your process. So that's my advice.
Fantastic. And what about you, DeWitt? What are a couple of tips to do or not to do?
Yeah, so everyone's hit on I think the most important one for me at least would be to have everything ready. If a business owner comes to me today and says, DeWitt, I've got a great business, I want $1 million term loan, I can move as fast as that business owner wants to go from application to closing. But if I send that business owner a needs list and say, okay, send me 2 years of taxes, 2 years of financials, personal financial statement, and the business owner goes, well, my financials aren't ready. And I go, okay, well, how long will it take for your accountant to, you know, close the prior month or to get the financials over to me? Well, I don't know, I'm gonna have to find out. Well, it could be a week. Well, it could be 2 weeks. Okay, so you're driving this business that wants $1 million loan, but you don't even have financials that you can send to me today so that I can tell you today, yes, your business supports $1 million loan, or no, your business doesn't support it. So having everything ready, I think that's crucial because it also tells the bank that, look, you're serious about this. You're not just calling 10 different banks. You know, you called this bank or that bank, you have a package ready, your financials are ready, you've shared them with the bank, you're serious about it. So having the financials ready, that's definitely one everyone's kind of touched on. I think a couple other ones that are important things that I like for a business owner to be upfront about is how to mitigate risk and mentioning and talking about any shortcomings, any challenges that I'm going to face in trying to extend the credit that they're looking for. So for instance, a couple months ago, I looked at a healthcare practice, and this was literally like June 1st, like after, you know, restrictions were lifted in San Diego. Looked at a healthcare practice that came to me. They wanted a large loan, and historically, this business produced a lot of net income. You know, we're talking $300,000, $400,000 a year in net income. It looked great on the surface. Year-to-date financials as of March 31st looked pretty good. I thought initially, wow, I'm going to be able to approve this one, you know, record time. And what the business owner failed to disclose to me is that his business had been shut down from April 15th, literally until June 1st. And now he's applying for a loan. And he forgot to mention to me that he's been closed for the past 30, 45 days. Even though he's made lots of money historically, he didn't disclose to me that he had been closed. So as soon as I found that out, and I found that out not by the business owner telling me, I looked on the website, I called the business, and there was a recording saying, sorry, we're not open right now. We've been closed down for the past almost 2 months. And that was a major red flag. You know, why would someone not disclose something that material? So talking about risks, talking about challenges, to me, I appreciate those things. So any kind of challenges that you're facing. You know, maybe you're applying for a loan and last year maybe was a break-even year. Or maybe, you know, you've had a losing year over the past couple of years, or, you know, you lost profit or you didn't make a profit over the past few years. Talking through those challenges, you know, literally in the first conversation you have with the bank, hey, I'm applying for $1 million loan. Historically, I've made a lot of money. My business was closed for a month during COVID. My sales are now back online. I'm making a profit. I can cash flow this loan. What can you do for me? So talking about those risks. And I think lastly, if I had to give one more tip, just things that I personally enjoy hearing from business owners are what their goals are, you know, what their ambitions are. So and I'll just kind of wrap up with that one. That could be anything from, you know, 5 years from now, I want to sell my business, or, you know, I want to go from doing 5 million in sales to 100 million in sales, or I want to buy business real estate over the next year and add it to my kind of retirement planning. So talking about your long-term goals, I enjoy doing that because it kind of tells me that you've really thought this out. You know, you're not just looking to borrow money without any sight on what the future looks like, but, you know, you've thought out what the real plan is, what the goals are, and I can kind of dial that in to my planning so that I can also be a part of helping you reach those goals.
Fantastic. And coming to you, Denise, you know, again, thanks to Home Street Bank, you're a fantastic sponsor. And so what are a couple of tips that you can give us?
Well, I will continue the theme of transparency. Absolutely, I would say that is the most important relationship to have with your banker, is to be transparent and to be upfront, because, and I think really, it's not that businesses are wanting to hide things. I think they're afraid that if they tell us these skeletons in their closet that, you know, it could be a minimal impact if we know and can tell the right story, right? But it could be, on the other end, it could be the reason why you're being declined. But letting us know and letting us work through that and giving, we're the professionals, so you give us the information and allow us to move in the direction that we may need to. And it could be not necessarily with our institution, right? It could be with one of our trusted partners that we know will take very good care of them, but it still accomplishes that goal. And that business plan is huge. So whatever that may look like for your business, it could be a pivot business plan. It could be your expansion to your original business plan, or you could be starting from scratch. But having that solid idea of knowing what you want your future to look like and how you're going to get there is definitely key.
Awesome. Such great information. I really appreciate the panel today. Some really good tips, some good things to think about, even some optimistic viewpoints of our go forward. Again, so, you know, it was from the San Diego and Imperial Small Business Development Center. Of course, we're here to help you work with the lenders like the folks on this panel. And again, thank you very much to all of our sponsors: Home Street Bank, CDC Small Business Finance, Main Street Launch, Primary Funding, and Marble Bridge Funding. And Home Street, yes, Denise, thanks for being on the panel today. Fred, DeWitt, Renee, Janelle, Sudarshan, thank you as well for your time. Thanks, everybody.